Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Thursday, the 18th of May, and Friday, the 19th of May, 2017. Hope you're having a good trading week. We certainly have. Here's a look at the ES front month futures contract. You can't make this up. 13 sell signal on Monday on the broad market, and then today, rolling over. It is remarkable. Um, there's a couple things about this that we'll discuss. Usually we don't do market previews Thursday night for Friday. That's why I said this is for both. Although if there's a lot of excitement tomorrow, we will do one for Friday. There's a couple of reasons to believe that we might continue to head lower fairly sharply tomorrow. Obviously, a lot of people pointing to the raising of the stakes over the Trump impeachment as being the catalyst for this, but I don't know that that's everything by itself. There's plenty of other things that could lead to this move. So while that might be the final nail in the coffin to get things moving down, I think this has been building for a while. Market's been very flat. This low volatility and low VIX reading we've been seeing is not positive for the market. People keep talking about the headlines and the market's hitting highs, and it just has not been at any pace that really counts. The volatility intraday has been horrible. It's 5 stocks carrying the Nasdaq. Everything else has done nothing all year. So we'll talk about that more in a minute. Crude oil up 5 cents to 49.12, no big deal. Gold up 23.5 to 12.59. You got the S&P cash index down 43 points. Remember, this one had the sell signal a couple days earlier, but we like to use the futures as it tends to be more precise. And this is a great example. I talk to people who don't use the futures. This is why the futures are really the more important thing to follow, because it's got the signal within a closer time frame to the move. NDX 100 down 143. It's the Nasdaq. That's a big drop on the Nasdaq. And then SOX down 47. Biotech's down 71, and this is still trapped. Remember, this is an example here. This thing's gone nowhere all year. As go banks and biotech, so goes the market. Now, the key here, the VIX, we've been talking about, we wish the VIX would get back up into that 14 range. Well, we're back to 15.59 in one day. Big gap up and move on the VIX, which is good for us. I mean, great for us from a trading perspective. Obviously, markets tend to go down faster than they go up, but just having the VIX higher means the intraday volatility should be more interesting. Trend closes at 1.22. That's got the 10-day moving average at 0.99. Nasdaq volume was 2.1 billion shares. So on the sell-off, volume's the biggest, without not including triple expiration in March. This is the biggest volume day of the year so far. So that's very meaningful. Advanced decline ratio, down to negative 2010. That means 2010 more stocks down than up. Yuck. That was on the Nasdaq. On the New York, minus 1763. Obviously, some of the worst of in the whole year. Google down 22.5 almost. Apple down $5.22. Amazon down $21.31. Got Netflix down $6.21. Tesla down $10.90. TLT up $1.77. That's the 20-year bond ETF, and then Goldman Sachs. Yep, down $11.88. That is one ugly chart, folks, and that has busted the risk line on that 13 buy signal, but of course it would in this environment. Taking us back to the ES real quick, one of the things we talk about is when we do have a first day down, and this is the green one that you see under the candle. Rich was talking about this today in the room. The 7-11. What it means is when you get your first day down towards a count in the opposite direction of what you've been in, if you close below the body of 7 days back and 11 days back, so if you just count back 7 days and 11 days, if you close below those days, it's a real move. And it typically means that there won't be any support tomorrow. You're basically taking people, everybody that's bought in the last month just went underwater in one day. And this is the other point I want to make about this is even if you go back to January 1st or so, you remember the headlines have been, new highs in the market, new highs in the market. Well, the NASDAQ certainly has because of 5 stocks. So those 5 stocks could come back as well fairly quickly. But the broad market, no matter what anybody keeps telling you, has been in a very narrow range. The individual days have been bleak and not very wide range, but just overall, looking at this, we came into the year around 2240 on the ES. And so we've got 5 months of saying market making new highs every once in a while. But if you look at it, we really were where we were about 3 months ago, even when we made new highs the other day and we got the 13 sell signal because of it. My point being, when you drop like this, 40 plus points, all it would take is basically 3 more days like this and we're negative for the year. And even if it's not 3 straight days like this, it could be another down day and then a bigger down day. And then, of course, we know at a certain point you get a panicky day. And then the news narrative changes completely because now you're down for the year. and you do it in 5 days, and that changes the focus and the mentality out there. So just be very aware of how this plays out. And of course, the big reminder, this was options expiration week, Friday's expiration, which means we could have seen an options unraveling move, and we most likely did today because the direction we picked after the first hour maintained and continued for the rest of the day. So there's your options unraveling. It got us short. We stayed on the short side of the market. We closed near the lows with some huge winners. Goldman Sachs, many points. Others did very well. Amgen on the short side. But the thing here is, again, there's no reason that this is the stopping point. And as you know, and I'm not saying that this is a scenario, but it's always worth focusing on. We do this every time it comes up, a couple times a year. Crashes tend to occur around options expiration because there's no protection in the market. So this weekend is options expiration. So for example, if we were to be down hard Thursday and Friday and basically have given up the year's worth of gains in 3 days and have everybody underwater from a margin perspective, that is not good going into Monday when you've got the least protection out there on the market. So that's all we're saying. Make sure you're aware of that. In terms of economic data, let's cover what's left this week. Thursday, an hour before the bell, initial and continuing jobless claims with the Philly Fed. Leading indicators 30 minutes in. Natural gas inventories an hour in. Friday, no data, but we do have options expiration. So again, we will potentially do a market preview tomorrow night if tomorrow gives us a big rocking day to the downside that we need to discuss. It's a little bit tamer. We'll just go from there. You know what to expect, and just be aware of that options expiration weekend. Certainly wouldn't want to go into the weekend holding stocks. Charts, as usual, brought to you by eSignal. If you've not yet taken the trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading Thursday and Friday.